Hey everybody there, it's Tim. For those of you who don't know me, I'm a mortgage broker in the state of Arizona and Colorado. For those of you who do, you guys know that I told you I'd always come out to you if I thought there was something big going to happen in the markets. And I think there's something big going to happen, so you need to watch this before August 10th. Today is August 9th. I'm recording this. I want to have this posted. This is not scripted. Probably not going to do any editing. I'm just going to throw this up. The information coming out tomorrow is we're going to get the CPI numbers. That's the Consumer Price Index. And let me tell you why I'm so excited. Let me show you. Let me show you why I'm so excited. Okay, so this is the forecast from the major banks. And it looks like they're saying that we're going to have some easing in July. And let's look at exactly what they mean. Okay, so the first thing is they're looking at the year over year. We all know there's a read of 9.1, and tomorrow we're expecting a read of 8.7. Now that's based on 44 economists. You have the low being 8.5 and the high being 9.0. Okay, so that's kind of your bell curve for your inflation year over year. Now, on top of that, you have your month over month, which is expected to be at 0.2. All right, last read, June, was 1.3. Okay, now core CPI, which is really the Fed's biggest, normally it's the Fed's biggest measure of inflation. It's their favorite thing to look at, because what it does is it strips out the cost of food and energy. And I know you're thinking to yourself, well, what else is left if you take out the cost of food and energy? And believe me, there's a ton of stuff on the bucket. But that number, the core CPI, is supposed to come in at 0.5 instead of where it came in June, which is at 0.7. Okay, so let's draw all of the energy costs, right? All of food and energy, 0.7. I mean, look at these major increases across the energy sector. Okay, now I know food, I do agree it's probably going to come in right around that 1.0. But then we have things like used cars and new cars. Those seem to be coming down. Inventories were certainly really high at Walmart, so we can expect, I don't know. Anyway, then you have the shelter. This one I hate, because what they do is they use owner's equivalent rent to figure out this number, and it's just really a BS number. It's like a survey of what people think they're going to rent for. So let's see why does this make me excited? Why does this information make me excited? Well, let's look at it like on a bell curve. All right, so like I said, we had a read of 8.5 consensus, 8.6. 8.7 was the median, 8.8, you had 8.9, and then you had a 9.0, right? So let's say this is your standard bell curve. All right, so where they're expecting, and I really think that normally they're going to look at core CPI, like I said, but I think tomorrow they're going to be paying more attention to the headline CPI, which is this number right here, the 8.7, which is where they expected. Last time they're at 9.1. Okay, so this is the read. Now, if we hit that 8.7, that means smooth sailings. The markets are going to be calm. Everything is just going to keep going as normal. If we hit above that, if we hit 8.8, if we hit 8.9, or worse, if we hit 9, or even worse, if it blows past the 9.1 number, then I'm convinced that the Fed's going to have an emergency meeting. Why? Because if it doesn't come in here or less, then they have lost all credibility with the markets right now. And I don't think that they want to do that. I think that they were being super conservative on their estimates. So what could happen if they're pricing in an 8.7, but inflation comes in at 8.6 or at 8.5? That would give the Fed, a great reason to come out to the markets and say, listen, guys, this is where we said before, we said it was transitory, then we said it was persistent. We were wrong about that, but we acted, we moved up interest rates fast enough, and we're able to get everything back under control, and now inflation is starting to ease. Therefore, we can start backing off the rate hikes, and that will be a lot more dovish for the markets, a lot more, people are going to want us to go buy the QQQ and, spend money on stocks, and it's going to be great news even for the bond market and for interest rates. But anything above that 8.7, we're going to be looking at maybe a emergency Fed meeting or just really higher basis points, higher basis point hikes than what we're expecting, which is 75 at the next meeting. All right, folks, that's it for now. Catch you at the next one. If you guys liked what you heard, consider liking, sharing, and subscribing. All right, talk to you later.